Good morning, everyone. Welcome to today's session. Today, we're going to talk about two costing methods, absorption costing and marginal costing. We mainly focus on basic concepts of absorption costing and marginal costing and illustrate the difference between two costing methods. And finally, I hope you will make sense of the difference in profit between two methods. Right, when we talk about absorption costing or marginal costing, so what are we actually referring to? So well, if we think about a manufacturing company and determine the production cost for this company, so we need to break down a few things. So remember, we have a direct material, direct labor, overhead. So overhead can be further down to variable overhead and fixed overhead. So now we have two types of overheads to determine the way of how we calculate a product cost. So when we use each method, so basically, so we calculate unit product cost, that's cost per unit. So if we produce, for example, so 1,000 units, so how this cost to attach to each product. So when we attach, look at here, so all manufacturing cost to product, that's absorption costing. It's also known as full costing. So we still have alternative here, so marginal costing, so which is also known as variable costing. So just be careful when we talk about marginal costing, so that's the costing methods as opposed to marginal costing, not marginal cost. So for marginal costing, so we actually only look at direct material, direct labor, and variable overheads. And variable overheads as production cost. So under marginal costing methods, so we treat fixed cost, look at fixed cost as a period cost, like non-manufacturing overheads. The key difference between these two methods is how we treat fixed overheads. Let's look at how each method works in our accounting system. Absorption costing system. So when we think about all this, so all this cost, direct labor, direct material overheads, that's all this cost into a product, that's absorption costing. So remember, we still have non-manufacturing cost here, that treated as period cost. So this cost directly moved to P&L accounts. So if we look at all this cost here, material, labor, and overhead, so all this cost will join the flow of inventory to work in progress or fixed goods stock. That included in cost of sales. And marginal costing, so we split, look at here, so we split overhead into variable overheads and fixed overheads. So we treat fixed overheads as a period cost. So now what happens to fixed overheads, how we deal with fixed overheads? So you might be wondering what this point is. So let's move to example which make it easier to understand. Right, now, so we are running a company that produces hot water bottles. So we are going to use both absorption costing and marginal costing method to calculate production cost and make comparison of what we calculated later, so between these two methods. Okay, let's look at the key information here. So we sell them, so £10 each, so variable cost is £6 each, fixed cost for each period £300,000. So for the information given here on sales and production level. So we have production level for each single period from period 1 to 3 on 150 units. So we also have the same production and sales level in period 1 on 150 units, but we produce more in period 2, sell more in period 3, and no opening stocks at start of period 1, and we just assume non-manufacturing overhead that period cost 100,000 per period. So now what we do, so initially we need to calculate the cost per unit under each costing method. Absorption costing methods and marginal costing. So each method needs variable cost. That's £6 per unit, £6 per unit. So remember, absorption costing, so that's 4 costing methods, right? So we need to add so fixed cost per unit into absorption costing. So how to calculate fixed cost per unit? So we have information given here, £300,000 for each period. So each single period, so from 1 to 3, have the same production levels, 150,000. So now we could use 300,000. That's total fixed overhead. So divided by 150 units, that's the number of units produced. So in each single period, now we have the fixed overhead per unit calculated £2 per unit. So under absorption costing methods, we need to add the £2 here. So join the 4 costing methods. So under marginal costing method, do we need to add on? No. So because we treat fixed overhead as period cost. So that's only true for absorption costing methods. So we calculated £8 per unit. And absorption costing methods, £6 per unit, and marginal costing methods. So when we have cost per unit calculated, that allows us to calculate production cost. So let's look at the income statement here. So look at here, production costs are calculated for each period, so between 2 methods. They are different. So because they have different cost per unit calculated. Now so we put £300,000 to each of 3 periods. That's treated as a period cost and marginal costing methods, right? So now we could have a look at the profits. Let's look at the gross profits. So look at period 1 here. So we have 300,000. So that so we have the same profit. So in period 1. So in period 2, they're different. They're different. So why absorption costing generates more profit than the marginal costing? The marginal costing, why? So because the number of units we produce is higher than sold. It's higher than sold. So in such case, the sum of overheads has stayed into inventories. So basically that means we are gonna increase inventories. We're gonna increase inventories. Look at closing. So closing stock here, and defer some of the fixed overheads to the future, but this case to period 3. So look at period 3 here. So we generate absorption costing method generates lower profits. So why this is the case? So where sales exceed production, the marginal costing system produce higher profits. at this point, so we need to think a bit more. So my question here is, which methods so will give manager incentives to produce more units, in order to lower costs? Yes, definitely absorption costing methods. However, it's not good for the company, as later so inventories might go obsolete. So under absorption costing methods, that's a bit easier so to build up a distorting picture. So with marginal costing system, so we don't have such issues. So question here, so why are people even using absorption costing methods? So what is the advantage of using absorption costing methods? So what's the main purpose of using these methods, and also any other main purpose using marginal costing methods? Okay, let's take a 5-minute break and get back to these concerns. Right, see you in 5 minutes.